Greetings and good day to you. I hope you're doing great. I'm here with the daily analysis of WTI oil on April 6th. We're in the first trading day of this week. Last week, we saw oil prices close at $103.62, with a growth of over 4%. At the start of last week, the price opened with a bullish gap, and after an initial rise, we saw a drop in oil prices.
Learn and enter the world of binary option with us. Binary option indicators, powerful strategies, learn, trade, win. Level up your trading.
As military tensions eased and the likelihood of negotiations increased. But on the last trading day of last week, which was Thursday, we saw over 10% growth in oil prices as tensions escalated. Here we can see that last week, the price drop filled the daily FVG, and then it moved back up. Now we're in the 6th week since the start of military conflicts in the Middle East, and we can clearly see that the price has grown by over $34 so far. Looking at the 4-hour time frame, we can see that after oil prices pulled back from the $112.61 range, the price is now in an uptrend, where we're seeing higher highs and higher lows being recorded. In this bullish move, we saw that as the price returned to internal liquidity zones, it faced buying pressure and quickly moved upward. Following the movement we saw in oil 2 weeks ago, we saw the price move up from this area with very good support, and will now consider this range the most important support zone for the medium term. Also, after the price dropped to the 4-hour FVG zone on Wednesday, it filled this area, and we saw a powerful bullish move following the increase in Iran-US conflicts. In this upward move, oil managed to close above its previous high, so we can consider this a bullish break of structure. We're currently examining the 1-hour time frame. Here we can see that at the start of the day after the market opened, oil prices first reached the 1-hour BPR zone with a bullish move. The reason for this price increase was further threats from the US president regarding the resumption of heavy attacks on Iran's infrastructure. But later, after an Axios report stated that mediators in the Iran-US conflict are making a final push for a 45-day ceasefire, oil prices pulled back from this level and have recorded a downward move so far. As a result, we can expect that final decisions for oil's next move will be made in the next 2 days. If the 45-day ceasefire plan fails, as the President of the United States mentioned, we could reasonably expect that attacks on Iran's critical energy infrastructure might begin as early as Tuesday. This could potentially lead to another increase in oil prices and a move toward the previous high in the $112 range. On the other hand, if they in the United States can reach a partial agreement in the next 48 hours, oil prices could continue the downward trend that started today for the short term. Good luck and stay profitable.
7 powerful volume trading indicators: footprint, volume profile, and FastScard. Level up your trading.